Good morning, everyone. Welcome to the trading room at Admiral Markets. My name is Chris, and we're going to take a look at the Forex market together on this 27th of November. The month is getting very close to an end, in fact, and then we'll have, of course, the last month of this year. That of course, is always a bit different trading due to the holidays. We'll talk about that a bit later in more detail. First of all, the risk disclaimer explaining that trading for exchange is considered high risk, just like any global financial markets and products. Please be aware of that, and this might not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thanks for your attention on that. We're going to take a look at supply and demand trading. So that is a different type of focus than we normally look at. We look at trends, filters, triggers, methods. So the main focus will be on supply and demand. So we'll talk about what it is and how to trade it in just a second. But before we do that, though, Mikhail will have a few words for us. Good morning, Mikhail.
Good morning, everybody. Good morning, Chris. Good morning to everyone who decided to join us for this webinar live trading session this morning. My name is Mikhail, and I'm a client relationship manager at Admiral Markets. Before Chris starts with all the interesting stuff, I have a little sweet and short story for you to entertain yourself before we get down to serious business. This one is called Fun with Forex for a few dollars more. A lot of people ask me what it takes to become a trillionaire in Forex. If I can give them any advice, if I can advise them on the first step to make to earn their first trillion in Forex profits. Well, in order to earn a trillion in Forex, all you have to do is start out small. Make a first easy step, a profit of $1 today. I bet all of you can do this once this webinar is finished and you apply the knowledge that you have acquired into practice. You can make $1 profit. After that, absolutely smooth sailing. All you have to do is double it every day for 48 days, and by the mid-January, you will acquire 140,737,358,355,328.00, all in Forex profits. And all it takes is just 48 days. So listen closely to what Chris is about to teach you, apply it into practice, double it every day, and acquire all the possessions in the world in just 1 month and a half. If you have any questions about how to do that, you can always ask me on my email, mo@admiralmarkets.com. Thank you very much for your attention. I will now gladly pass the floor back to Chris. Thank you very much.
Thank you so much, Mikhail. Mikhail, again, setting the bar for this session very high with a goal of 147 trillion. That's going to be a tough one to achieve. I'll tell you that. if not close to impossible. So be careful with the ambitions here. But funny though, funny information from Mikhail. Let's take a look at our Forex calendar first of all. With the end of the month close by, Friday is of course the last day of the month, so that's always a bit different trading. And tomorrow is a holiday in the U.S., so that could see maybe some or a bit of decrease, at least maybe a very slow down. Who knows? And the Friday will be the last day of the month. So today is basically more or less the last normal trading day, in my opinion at least. And especially tomorrow will be definitely slower. Then of course to next month things will also start to change. The first 2 weeks should be okay, but definitely if you get in the third week of December, volatility is slowly but surely decreasing and becoming less movements in price. And obviously during the Christmas holidays and the New Year's, the volatility drastically decreases, and the likelihood of price movement is just very, 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 very small. Not to say that the price doesn't move at all, but the chances of that are just drastically reduced. And you'll see that volatility decrease in week 3. Slowly but surely it will start to move down, and then even the first week of January will be slow, but the tempo, the pace will pick up eventually in the second and more in the third week. Alrighty. Today, though, we have GDP. That's a pretty big announcement on the pound, as more often we have at 9:30. Then we have a USD core durable goods with a lot of USD news, apparently, because there's a really long list here. Let's move over to the charts. Tarek is saying that he hopes that the IRS guys didn't read that number. Yeah, that's true. The euro dollar. We were talking about the fact that price action was bullish, but that we were very close to resistance, and you can see what that caused. It caused the currency, after that spike up yesterday, basically price went down 5 hours, 6 hours, moved down some 40 pips, then finally made a spike up. So that's what happens when you're caught in this area between resistance and the uptrend, for example, or a downtrend and support. Price doesn't really have any space to go, and it's kind of caught in two worlds, and then goes to sleep a bit. This downside very slow, but then finally did find the support to break through the resistance. Took a while though. So let me open my drawing tool. I don't have it open yet. 1 second. Good. So eventually made an upside, again 2 hours pause, a bit of upside, 5 hours pause, and during the Asian session it actually made another move up and thereby breaking this resistance level. So whatever this wasn't a bearish break, it was just a correction from our upside. And looking at the bigger picture, we have a 61.8% retracement at 136.25. So price should be able to push to that level at least. So I would say now that we've broken this resistance, any move down should be still find support eventually for that up move to the 61.8. The 4 hour support is at 135.20. Back to the 1 hour chart. So 135.20 is really the safest place. But any move maybe back to the 135.50, 135.60, we should be able to see, I would think, the 132, a continuation, I wanted to say an increase, a continuation up to 136.25. Look at the moving averages. Price is above those, and with the resistance out of the way, what is the next resistance? Well, it's basically this level. So we should have space up to that level. We can even put maybe a fib on this upside here, and a 50 at 135.60, or the 618 at 135.50. Those should be bouncing spots roughly, maybe max 135.40, and I think a stop just below here should be sufficient for that upside potential. That's what I would think. Looking at this, remember we were looking at the price action yesterday and saying it's bullish, and it just got that continuation. So I wouldn't say there's anything today that should change that view or analysis. Regarding the supply and demand, not sure if there's anyone who didn't see the previous or the first supply and demand trading. If you were not present there, let me know. Otherwise, I assume that you know how to trade it and what we're looking for. If not, write something in the chat, like, this is my first time here, or the first time with supply and demand, so that I know that we have a few that were not present at those first two supply and demand webinars. Otherwise I'll be repeating myself, and everyone knows, and it would be boring for those who are not there. Okay, I got one that didn't see it. Anyone else? Well, we can take a look at it then. Okay. Okay, so we still have a few that didn't see it. That's definitely possible, I can imagine, because we only had I think 2, so not that many. Good. Well, basically what we're looking for is supply demand is basically where price is moving impulsively in one direction, pausing in a box like this, a tight range, and then continuing in the same direction as the previous impulse. How strong, there are some things you want to pay attention to. The box, the range in blue, should have relatively tight bottoms and tops. All right, so there should be, in that blue box, there should be, for example, 2 hits at least at the tops and 2 hits at the bottom. Otherwise, well, let me say it this way, there should be an area where you can nicely put a trend line above and below. Because if you have something like this, for example, let me give you an example like this, then this is not necessarily a supply-demand zone. It's just a continuation of the upside, right? Or how about this? That's not a supply-demand zone either. That's just a bull flag or a correction for more upside. That's not what we're looking for. We're looking for a flat range like this where price is basically contained within those 2 levels. All right. Once we have an impulse, a thrust, and we have a blue box like that, where price is relatively flat, and it continues with an impulse like that. So that's the characteristic. If then price hooks back to the blue box, it would be a potential support area for upside. And the trade could be taken with a stop loss below the blue box in the uptrend example, and the entry could be anywhere within that blue box zone. And the target is 3-to-1. So some things to look for is if it's 3-to-1, for example, can you get your 3-to-1 before the next top? If so, that's a bit better setup than if the 3-to-1 is aiming way above the next resistance. Also, some things to look for is how big is this impulse and how big is the next impulse. Right? The bigger the impulse, the more basically the more stronger this setup is. If you have a small impulse and a box like this and a small impulse again, that has less meaning. But if you have a decent impulse box and a very big impulse after that, then that zone has more meaning. So that's basically what it boils down to. There are some things I'm sure we'll bump into that I haven't explained here, but that's a rough guideline here with the most important details as far as I know. Okay? So that's what we're looking for. And this could have qualified right in here, for example, practical example. It could be anywhere in that box, in fact. Anywhere you could be at the top. It depends how big that zone is, what time frame, you know, how tight R2R you want to make it, how much risk you want to give here, because the more risk, the bigger the 3-to-1 will be. For example, if you have an impulse, supply demand, impulse, and you have a top right here, price hooks back. If you take an order right at the top, then your risk could be, let's say, 50 pips, but maybe the space to the next top is only 100. So you might want to adjust the entry order just a bit lower to a 40 pipper, because then your risk is 40, not 50, and your reward is 110, which is close to 3-to-1, for example. That could be an argument. Let's see. No, it would still be inside the box. It would just be just a bit more inside. So let's take this example, like this. Instead of right at the top of the box, for example, you put it just a tad below it, which means you're kind of like 1/4 from the top, for example. That's, depending, or you want to put it halfway. You could use, or even the bottom, you could use, for example, Fibonacci targets to establish where in that area we could see a more likely bouncing spot. Now, you want to be careful with the lower than 1 hour. I'm sure it will work, but you might have more whipsaws, and the higher time frames do give a bit more reliability in this case. Let's see what else. Yeah, you would probably need to use a bit of confluence to establish which one is more likely. Alrighty. So do we have any supply demands here? 1 hour chart. Let's start with the 1 hour. And not really, because price was very choppy and retraced everything. So if it retraces like this, that means there's no supply demand zone, because what we're looking for is an impulse, sideways, an impulse. So if there's no impulse, basically you don't have it. Any corrective move like this will not have a supply demand zone, because everything price is overlapping each other. Everything is retracing each other, and everything, all candles are being retraced, all moves are being retraced. It's a lot of ups and downs. When you have a lot of ups and downs like that, you wouldn't have it. As I said, the only one I can find is here, but price already hooked back to that. You see, we broke out, hooked back, and this impulse was pretty small. Also, once you hook back to a supply-demand zone and bounce, that one isn't valid anymore. Well, it is still valid, but it's less valid. The first one is the strongest. Also, any up move, sideways move, any up and correction and continue, as I said, doesn't count. This is a bottom, not a supply-demand zone. Okay, so all these don't count. These are just bottoms. So I don't see one here. Let's take a look at the 4 hour chart. There are a few here, right in here. And you can see that's where price stopped, in fact. This is an example of, well, it could be an example. It's more like a flag than a range, though. But that's an example where price went through it, in fact. Although it's disputable if this one really qualifies, because it looks more like a flag. Let's see. I don't see one right now. So I think it's best probably to analyze the charts, and if I bump into one, we'll discuss it. Okay? Otherwise, here you can see the euro-dollar in general is pretty corrective. We got a few bottoms, but otherwise price is really retracing a lot, and there was one here, for example. This is a supply-demand zone. Impulse, box, continuation, and price did hook back to it, did bounce off it, but the bounce was all, and then it still continued down. But it did respect it. This is not a supply-demand zone here because it is a top. So the best example on this chart, on the daily chart, is right in here. Alrighty. Let's continue with others, and then once again, if I bump into it, I'll let you know. Pound dollar is right at that major resistance. So no sense to go long or short, I think, personally. Well, short, if anything, short could make sense because you have a very tight risk and you do have a lot of potential. I mean, the chances of that trade really materializing is always small if you take a reversal trade like that, per definition, but the risk is very tight. And we are at a bouncing spot. We're at a very, very key, major top. I mean, I can't emphasize it more. It's really, really exciting because I'm just curious what direction it will go to. Will it break to the upside, or indeed finally bounce? And then if it does bounce, boy oh boy, did this pound dollar really test the top, to exhaustion, because it went and hooked back here. Then it finally seemed to be moving down, but no, I said watch out, it could even move back to 786. It did that and more. A triple hook back, a quadruple hook back. If it does move down, this was the ultimate test of resistance, that's for sure. And that would be really extremely funny, because this is just a tremendous push up, in fact. A lot of pressure to the upside. If resistance still holds, that was a gigantic battle here between up and down at the moment, between resistance and a trend, because the trend is up, but the resistance, boy oh boy, is major, as I said, because if you look at the daily, you got tops in here, and a weekly trend line. In fact, it's not on the chart. I have to draw it again. Right there. So that's major resistance. Can't get bigger than that, in fact. And but then again, this looks like a bull flag, so that's why it's very puzzling. From a trading perspective, though, this is just analysis and my fascination for this current situation. But from an analysis point of view, personally, I would want to see a break above 162.60. Then there's some space to 163.30, and then above 163.30 if we manage to break there. From the downside perspective, we would need to break this channel. So have some confirmation of a reversal. So pound to dollar is pretty easy. Simple. Sweet and simple. Alrighty, let's take a look at this zone in here. That is a bit of a supply-demand zone as well on this 4-hour chart, and one maybe could argue that it could have been used here, although there is a bit of a difference there. Still, there could be an argument that that was used. Why is that a supply-demand zone? It's an impulse box impulse. This one, no, not this one. Here's one, but that was used already. It's not something that happens, every single week or something like that. You can see that price is pretty corrective, and it overlaps a lot. Let's take a look at the hourly. Well, here is one, but that one didn't work too well because price pierced through it. And that had everything to do, of course, with the fact that, in fact, price just reversed here to the upside. Well, nothing you can do about it. But in theory, so this would have been if you would have traded that one, that would have been a loss. But that would have qualified, though. So, of course, not everything is perfect. So that's the downside example on the 1-hour chart. The upside example here, where I have the blue circle. You got tops in here and bottoms in here. So that's flat enough. It's quite small, but it's enough. It's Richard, by the way, it's supply and demand, or yeah, it's basically just the name of it. So it's not, it's both are in the name, in fact. Supply and demand. Maybe I was saying supply, or I think I should be saying supply and demand trading. Let's see, there's some other questions. Give me 1 second, folks. I'll take a look at those. Life is asking, if you are long and you come into a box, do you sell and when? Inside the box, I mean. Not sure if I understand the question. Basically, if you have an upside and box, continue, oh, what you would be looking for is a long indeed from after correction back to the blue box and the zone for an upside. The reason is from a technical point of view is that basically there was a lot of demand, then the currency just went flat, so there was no supply, and then again upside. So there's a lot of power to the upside. So if price goes back to that blue level, then there should be a demand again. Oh, well, Richard, I don't know, to be honest. I'm not sure if it's relevant or not, but I'm not an expert in it. What I think is meant by it is just that the one overweighs the other. Which one it is, I'm not sure if we can detect that just by a plain chart, in fact. Maybe the banks have some way. They probably see, of course, their orders, so they would have more insight in that. Let's see, Tarek is asking, does that also go the other way around? Yes, yes. Sorry, I was only giving actually upside examples. Absolutely. Down, box, down would be the same. Look for correction, back, and then down. Now, mind you, personally, I would definitely only use it in combination with some multiple time frame analysis, because as I said, if you look at this 1 hour example, it's a perfect classical example of where the higher time frames are in a reversal, and then this 1 hour example just prices blast through it, because it's actually the whole psychology has changed from downside to upside, and then whatever resistance we can see on the charts, it's just price is going to break through that. All right, so be careful with that. Take a look at the supply and demand zone. I mean, at the higher time frames, to have an idea whether the environment, if we can expect a reversal or continuation. If we can expect a continuation, then a zone like this would be very useful addition to your analysis, and might even prove to be a good entry as provided earlier on. All right. The questions were if downside is possible as well. Yes, you can have downside box, downside continuation. The other question was if I know which one it is, a supply or demand zone. I said no. All I know it's a supply and demand zone. Only the banks would see large quantities of orders and would know where those orders are. Yeah, that's it. Good. Life is saying that it's important to notice what time of day it is. It is different in different pairs, and it could be a box during Asia or Europe could be different. Yeah, definitely on the 1 hour chart, obviously, is very important for sure, and lower as well if you use it for lower. Definitely. I would agree with that. Yeah, you could look at it that way, Richard, that you could say short from a supply zone and long from a demand zone. That's one way of looking at it. Although we don't know if the down move happened because there were no buyers or because a lot of people were selling, in fact. It could be both. If there are no buyers, price will go down, or price could go down because there are a lot of sellers. So yeah, not sure if we really know. But I guess you could say it like that. But you see my point, right? I'm not sure if we really can find out. Ahmad is saying how much potential pip gain if the reversal on the pound dollar works out. Yeah, it is a very risky one just because price is pushing so much that I think the odds of it, I guess, breaking through are definitely increasing. Not that I would like to take that chance because to me, we're right. You know, the risk is all the way here and the reward is maybe here. It doesn't make sense for me somehow, at least not on this time frame. So the chances are pretty not all too big, let me say it this way. If it does move down, the first bouncing spot could, of course, be this bottom of the trend channel. And after that, this horizontal support. And after that, this horizontal support. And if that breaks, well, that breaks, then it could be really falling a lot. So what is a realistic target? Really depends how far you think this could fall. Of course, the further we target, the more difficult it is for price to get there. In this case, I'm thinking what could be the most realistic. It also depends on your personal preference, in fact. I mean, up till here and here where I have the green circles, I thought that this could easily fly back to this bottom. I'm having a bit more doubts now that price is retaining that bullishness so strongly, and I don't think that's that likely. But if you aim for 150, obviously that's a tremendous reward. Maybe aiming, though, for this bottom right in here at 159 is a bit more realistic, because then it's still, price is just still within this range. If you really want to go for a short-term trade, it would be this bottom, but I don't think the bottom in that uptrend channel is worth the risk, because that's a relatively very small potential for a trade that doesn't have much chance. So it's a realistic target, but it's a very weak R2R for the risk involved. So that's what I would think. Aussie broke a bit further than I expected, in fact, and sometimes that happens when you maybe overanalyze. Should have probably taken the break, and if it does bounce at this expected level, you know, tough, move it to break even. But if it does break, you get a good trade. So that's what happened. We did get a continuation, and was expecting an inverse head and shoulders, but never materialized. What can you do? Should have probably taken the break, and now again in a bear flag. Here's a supply and demand zone, a very small one. Right there, we have the arrow. Or I can put a, let me put a shape there. Right there. Small one. It's only the 1 hour chart, but it's a good example of impulse, correction, impulse. Range, I should say, instead of correction. So what do we have here in the bigger picture? In the bigger picture, we have a good downtrend channel, and price is fighting through the bottom of the downtrend channel. So we'll probably have to correct this wider. For the moment, though, I'll leave it like this, and let's see how far we can break through. This was a good correction. Here, too, we're making kind of a bear flag. And looking at the moving averages, nicely pointed to the downside. This could keep pushing. In fact, we just broke a bottom here. That could have been a break itself already, right there. It's a pity we didn't see that. Let's see, what would be the entry just a few pips below there, 91.12. Ah, that's a pity. We got a hook back here. That would have been a good entry. Got a bit stuck on the pound there, but just like here. The upside correction is very, very weak. Still, I'll probably try an entry order still at the same price level as the breakout. Yeah, this is a good continuation. Let's see if it just pops up just a bit more still. Up to this 91.16, about halfway, right in here. If it just makes that pop up, that could be a good hook back for more downside. And I'll chill stop the 15-minute fractals. Alrighty. Sorry for all these fibs. Let me take this one off because we see that the 38.2 got respected with triple top, making kind of a correction here, now breaking through that. So that looks like a good sell, and I have a pending order just in case it were to retrace a bit back towards that breakout level. But let me get rid of that fib, otherwise it overcrowds the chart. Here too, we had a very strong impulse break after this trend line, and we're getting a hook back and continue here. So a lot of breaks on the Aussie, a lot of weakness on the Aussie. Alrighty. So I got some questions. If I'll look at the yen pairs, definitely we'll do that. And if I could draw horizontal lines, let's see. Not sure what you mean with horizontal lines. I guess you'll have to explain a bit more what you mean with that. We could put a horizontal line here. This is a clear support. Oh, and the 15? Okay. Let's take a look. Horizontal lines, top and bottom. Here's a top, and this is the current bottom. We could put the entry order maybe just a bit higher. I don't know. just in case it pops back even more. It's 24 maybe. No, I'm not sure what you mean, Richard. Up. Ah, you mean here. There are bottoms in here, right? That's what you mean? No, down? This one? Ah, yeah. That's always a small bouncing spot indeed, and can provide indeed the currency. What the currency is always doing is from bouncing from one support and resistance to another indeed. So you will see bounces on smaller time frames, but in general, yeah, the trend line, yeah, you could do that indeed. The trend line is not that important though. In fact, this is just a correction. Just looking at price action, you can see impulse. This is corrective, and we're getting an impulse here. So the likelihood of a continuation is pretty high. If you look at the 1 hour chart, then you can see also the moving averages are pointed down. This has already moved down a lot. Breakout, weak, continuation. What do we have here? Strong impulse, bear flag, break, correction, pretty strong bearish price action, all below the band. So there are a lot of things to think that it could continue. Now, look at the daily chart, very bearish. Obviously, this will not continue forever. Yesterday's low could provide support, you never know. But if you break that, you can see the next support is all the way here, down here. So there is some space to fall still. Will it do so? We never know, but it has fallen quite a lot, and it's a good trend, so it could keep pushing. There is always the risk, indeed, that it could correct higher. That's true. This so far has been a very weak correction, but you never know. There could be a correction back to this resistance. If it does pull back that deep, then that would be still a good sell as well, anywhere in here for downside, by the way. Looking at this correction, I was expecting a deeper correction indeed yesterday. That's true, Richard. When I was looking at it yesterday, I actually wanted to sell it in here after a hook back. But looking at this formation, it looks pretty weak, so I have some doubts. But maybe we should be a bit more cautious indeed. Let me take a look at the 15. Maybe wait for a break of this level. You're right. I think it could be better to be a bit more cautious. I'll take it off. And let's see how price responds when it gets back to this level up in here, or if it were not to get that high and alter or halt here, we could still look for a breakout below this level. Let's say in the worst case, in the scenario that this currency doesn't break to the upside and doesn't retrace as high as this, but decides to move down again after retrace, then probably best would be the entry order below here. So one of the two we can look for. Richard also has a screenshot. 1 second, I'll try to copy that somehow. Yeah, impulse indeed. We're definitely in a corrective phase. The question is, has this correction ended, or are we continuing down? And my answer was at the first that the correction has ended, but maybe a bit more caution is needed, because yesterday I was thinking like the best selling point is back to this resistance. So maybe the market will hook back there. So let's wait for the break below this 91 level. Break below 91, let's take a look what kind of targets we could have. Break below 91 should see a continuation down to 90.30, which is 70 pips. So 90.30 would be the target for the moment, for the short-term downside. Let's go to the yen. But let me just show you one more screenshot. Richard has the same. A bit higher, in fact. Richard's looking for 90.60 or 90.30. Yeah, but Richard has a red line here, just below 90.30. So we got about the same. There is something in between here. I'm not sure what that is. But the red lines are about the same. Let's see. And also looking for a break of that level. But these are different bars. These are range bars, aren't they? Interesting. Or no, these are Heikin-Ashi candles. Oh, that's the ATR. Okay. It's the ATR. Cool. Nice one. Great job, Richard. Thanks for those screenshots. Oh, those are pivot lines. Okay. Yeah, so 90.30 seems to be the target, at least for today. And who knows, of course, how far this could go, because from the daily perspective, we have a bottom all the way at 88.80, 50. And if we break below there, we could even see this fall to 83.50. So there could be a lot of space on the AUD USD. Let's take a look at something else, though, for those of you who don't trade the AUD that much. Maybe the dollar yen finally breaking to the upside. We were talking about this bull flag yesterday, and the fact that it should be stopping anywhere in this zone. This is a small supply-demand zone, actually, in fact. The disadvantage of that, it is a supply-demand zone, only the impulse after that was quite weak compared to the impulse before that, which makes it a bit, maybe a tad less desirable demand zone, or supply and demand zone. Let's see. Here's one, I think, very small one though. This one was one. Other than that, not really. Maybe here. That one was already used though. You can see that's where price bounced off. And the others were just actually bull flag corrections, so they don't count. So this break is looking like we could at least move some bit. Let me take a look at the targets. Target would be 102.50 for the moment. And looking pretty bullish. Break, pull back, continue. We're in the continue part now. The best one was either the break or the hook back. But the continue could be too, but let me take a look at, let's see, let me take a look at the 1 hour chart. That could maybe even be worth an entry, in fact, right now here, because it is still relatively at the beginning of this breakout. We do have quite a bit of space. So I'll try a long here upon the break of this as a continued trade with a tight stop loss below here, aiming for that 102.50. That has nothing to do with supply and demand, but it's a breakout trade. Tight stop loss below the for 15-minute fractal. I will do a TP at 102.46, but I'll trail stop it as well. I'll trail stop the 15-minute fractals. Anytime I see a 15-minute fractal, I'll put it 5 pips below it. Maybe I'll put the stop loss just a tad lower at 36. No, sorry. I got the levels mixed up. So I'll just leave it at 40. Yeah, 41. Okay. So 41, 25 pips. And let's see, what is the potential? It is 80. But as I said, I'll trail stop the 50-minute fractals. So if there's a 50-minute fractal here, I'll put it 5 pips below there. If there's a 50-minute fractal here, I'll put it 5 pips below there, etc. So I'll try to let the profit run, and if it does turn around, try to cut it short. We got a full hourly candle above it, plus we're retracing that hourly candle right now. So it looks like a breakout and continue to me with a clear target here, which is the 272. This was a nice hook back to this zone right in here. So let's see how this breakout trade goes. Looks good to me on the dollar yen. How about pound yen? Pound yen is breaking to the upside as well. Price is very, very impulsively above the moving averages. And we got a good correction on the 1-hour chart. And once we broke above these tops, moving pretty fast. This is a bit different than the dollar yen because this already has moved more than the dollar yen. Doesn't necessarily want to mean that it stops right in here, but this too could be still a continuation. But the breakout trades were a bit lower, and the continuation trade was already lower. So plus it's already a bit closer to the resistance, so that alters the balance just a tad for me. And therefore, probably would rather see a bit of a pullback before taking it again in that upside direction. Euro yen, same thing. Euro yen, two big impulses to the upside, big trend to the upside, breaking all resistances. In fact, as of a few hours ago, we even broke through the most recent top right in here. Here too, though, it's pretty far from the band. Let's see. Let me take a look at the hourly closer. Let me take a look at the angle. Very good angle. Well, the euro yen could be the same in the sense that, like the pound yen, a break above this level indicating the continuation, in fact, could be just as valid as the dollar yen with the stop loss below here. So it's more or less the same as the dollar yen. Depend, of course, on the euro dollar as well. That is a bit set in uptrend, so maybe the euro yen could have been a bit better than the dollar yen, but the yen itself is weakening, so both will probably see some upside continuation. But yeah, the euro yen I think has the same setup. It's just set a bit differently. But for example, it already has broken the top. It moved a bit more, but it could also be a continuation trade, in fact, with the same 15-minute stop loss. Same idea, in fact. And it's moving pretty bullish as we speak. Alrighty. Well, that's basically, it's very simple, the yens. In fact, let's see if there are any supply and demand zone potentials right in here. Let me scan the charts. One second. Let me just go through this up move. So I'm scanning, but there are a few here, but that's way lower. Anywhere where you have a stronger move, you'll probably see a few of them, like here, but that one has been used already. And here, that one seems to be used already. Let's take a look at the 4-hour. Maybe here's a, no, that's too tight probably. You do need a couple of candles. I mean, 2 is too little really. Then it could be a supply demand zone on a or demand, yeah, supply. In this case, demand maybe, but it's too little, 2 candles. This is a top. Day chart has them, but they're pretty far from price, and this was too corrective to have any. But in any case, pretty exciting to see the yen so moving up so nicely. It was a bit of a corrective move up here after this spike. This was pretty choppy, but finally, since this bounce, getting a bit more impulse to it. And the last 700 pips have been moving pretty fast, in fact, this month. And that continuation trade working out pretty nicely. Let's see how my dollar yen is doing. That's up 7. Not as much as this EJ probably, but so interesting, of course, to see these yen pairs in such a high territory and trending so much. So I got a couple of remarks or questions. If I could please increase the space. Not sure what you mean with space. Do you mean this, like wider view? Like this? I don't know how wide, like this, for example? Okay. Yeah, for me, I have the tendency, I have to admit, to squeeze up charts because I like to see the bigger run, let me say it this way. But I'm not sure how that could be very difficult for you to see indeed, because I have a big screen and I don't know how condensed my screen is indeed. So that could be that could be annoying indeed, I can imagine. I try to think about it. It's just my natural tendency to kind of squeeze it to see a lot of price, but I can just do that by actually zooming out to a higher time frame. So I'll try to keep it in mind. Remind me if I forget. And another question: would you once in the future share a file of your template and explain to us in the webinar what it consists of, so we can live your picture better? Yeah, sure. Well, actually, I explained it yesterday, this template, in a webinar regarding moving averages, because most of the template is in fact moving averages. The trend lines, of course, and fibs, I add when necessary and when I think it's useful. But the standard template, I use moving averages and one indicator and a fractal. But so the template isn't that complicated. I can share it with you, but it's just it's not so difficult. I think it wouldn't be too difficult to put it together. It's just kind of like 5 moving averages and 2 indicators. I can tell you which ones those are, though. No problem. I'll write that down for you. By coincidence, yesterday we discussed that in the moving average webinar. It was really coincidence because we didn't have a moving average webinar so far. But there should be a recording of that. There should be a recording of that webinar. So if anyone is curious about it, by all means take a look. It was recorded yesterday. I'm not sure when it will be uploaded, but I guess by next week it should be there. So if you're curious about the template, then the webinar on the moving average would definitely be useful for that. Okay, Tara? And if you have any further questions, of course, by all means, let me know. I gladly answer those. That webinar was not so, there was not much interest, in fact, from the moving average webinar, which surprised me. But maybe, I don't know. I don't know why. Maybe it's just coincidence. Maybe not a popular topic. I'm not sure exactly. In fact, maybe you know. If you have any views on that, let me know. I would be curious. For me, I think to me, they provide a lot of information, but I guess, yeah, everyone has their own preferences. The euro odd here too, was looking for a correction, in fact, down to the 50 or 618 yesterday, but just like inch forward upwards, so not getting the correction I was actually hoping for we would get, which is a pity in a way. And the 50-minute world is just pushing forward. Here too, there could be a breakout again after this break at the top. How about the pound odd? Here too, was hoping for a bit of a correction. Doesn't happen. Is not happening as yet on this Aussie. Let's take a look at the pound odd from the 50-minute world, though. Yeah, here too, there could be a breakout trade of these tops. There's enough momentum looking at the moving averages, looking at price. Yeah, there's a lot of momentum, so there could be a continuation trade here. Yeah, we can take a look. I forgot I need to look for supply and demand in the euro and pound. Let me do that, in fact. Let's see, there should be something, because judging from this massive up move, This is a very big impulse. In fact, it's such a big impulse that we didn't even have a pause within that upside. That's kind of funny. It was so impulsive, you know, that you didn't even have the pause, the impulse, pause, impulse. This was just one impulse, funny enough. Wow. It's really tremendous power. So that's going to get some follow through. Let's see if there's anything on the 4-hour world. This is not on the right here. That's just the bottom. That's not an S&D zone. Day chart. Maybe here a bit. One hour. Maybe here. That could be a good one. It's far from price. So unfortunately, it doesn't look like we're going to get there soon, but that could be one right there. Oh, that's a 50-minute world. Okay, well, anyhow, that's a 50-minute example. That's also hoping one of the reasons, you know, why you could expect maybe a bounce to 50, although we pushed through higher. That's a 15-minute example. How about 1 hour? Maybe here. They're not really good examples today. Let me take a look at the yen, dollar yen, see if there was anything. I don't remember. Oh yeah, we looked at that already. Maybe the Aussie 15-minute world. Let me take a look. Let's see. There was one all the way up here in the 15. There's one here, in fact. But there's not one really close by that would be tradable. That would be nice for us to see how that looks like when it's a bit more within our reach. Maybe we can scan some other currencies. Tarek, yeah, that could be indeed. Tarek is saying that that the webinar today, he thought it would be a basic webinar of why price moves up and why it moves down, and he never thought it would be a price pattern. And indeed, yeah, that's for us, as far as I know, it's kind of the only way for us to judge that, indeed, because otherwise we don't know where those levels are. The only thing we can, of course, really be more certain of is for example, this is just a fact, right? Price moved up, went sideways, went up. So that's, you know, that's what we know. In that case, though, this one didn't work too well. And the reason why, of course, is that it had a big impulse, it had a box, and it had a very small impulse compared to the previous impulse. And it had a pretty big wick, and it was more like a spike. And this not to say that it wasn't an important level, but it wasn't as strong as we could imagine it would be. Here, too, an example of that we have to be careful with multiple time frame analysis because price did respect that level, by the way, but it only made a retrace. You see, it made a retrace down, but then still continued up, and that had to do with the long-term analysis, switching gears here. The funny thing is, let's see, I think that here there's a bit of a zone as well. Maybe not as neat, not always they're neat, but could qualify. Although these bottoms are not that nice. It's more like a chart pattern. And yeah, price did stop there. This was too choppy to have one. Let's see. Yeah, if I zoom in, we won't see any supply demand zone because then I don't see enough price action. But maybe on the 50-minute world, let's take a look. There is one here. Well, that's a good 50-minute example, finally. It already happened, unfortunately, but you can see this is a bit of, the bottoms are maybe not totally equal, but you won't have it always precisely. It did have a good impulse after that, and the hook back got that resistance. Does anyone have any questions, by the way, regarding any currencies or this type of analysis or type of trading? Tomorrow we will not have a session, by the way, because I'll just take a day off with the U.S. market down and also the last day of the month. So I decided to take it easy with the last 2 days of the month, and won't be trading myself tomorrow and Friday because anyhow I don't like trading on the last day, and if Thursday is a bank holiday in the U.S., I don't expect much. So it seemed like a perfect opportunity to because I didn't have any days off. In fact, I didn't take any days off since the summer. So we won't have a session tomorrow. Therefore, the CAD. Let's see. I was doing a bit of a long-term analysis, and if it does break above these tops here, there could, who knows, we could have maybe a pretty good breakout trade. Of course, the pound CAD is already breaking to the upside. That could be pretty interesting, in fact. The Euro CAD is close to resistance, the dollar CAD too, but the pound CAD really trending nicely to the upside. So maybe we can see more upside there. The dollar CAD is close to resistance, but it is breaking above this trend line. It has this horizontal resistance close by, but if it breaks above there, we have still maybe some level at 106.60. If we break above, then 108.50, but then this could be pushing up. There could be an ascending wedge as well if you look at it from these tops like this and these bottoms like that. Then a pop-up could move up pretty far. Maybe next year. Something to keep an eye on in any case. You know, that would be an interesting potential there. For the moment, though, we are close to resistance, and this is moving up, but it's moving up pretty slowly. And we had a lot of chop here. Finally, we broke, and again, a lot of chop. So down to the 1-hour chart, we could be breaking out now, but it's not an easy pattern to trade with this. Maybe, what is it? It's more like a range or triangle, in fact. There is some upside angle here, especially last hour was pretty impulsive. I mean, 2 hours ago. Looks like we could find some support here to continue. And I think it makes sense to be on the lookout for upside continuation trades, because it is an impulse up, it is a correction sideways, and we're attempting to break out. So there is that potential. It is still quite choppy, as you can see. So look at this. It's not an easy one to trade at the moment, probably because it's so close to resistance. So difficult. Long-term picture, very interesting if it can move and break to the upside. Short-term looks very choppy, looks difficult because it's close to resistance. Could have a lot of whipsaws because of that. But if you find a good place to position yourself, maybe even here, there could be potential continuation trades, but just be aware that there is that risk of this stuff here at the moment. That's the only thing. Let's see how my dollar yen is doing. Dollar yen is also not continuing as yet. Let's see. I bought it somewhere in here, I think. So it did have some upside, but let's see. It's just maybe a small retrace. The CCI, yes, I don't use it, but I know that a lot of people use it. The question is if the CCI is a useful indicator. And, well, I would say so, but it's just not that I use it, so I wouldn't be able to really comment on that, if, to what degree and how to use it. But I'm sure that it has good information. You just, of course, need to get in touch with that indicator and get to know it better so that you have the most value out of it. But there are definitely sizable good traders that use it, as far as I know. So. Any other questions, maybe? Otherwise, at the moment I'm scratching in my head, but I guess besides the odd, to think what kind of trade we could have, but odd, if I would like to sell from higher or from a breakout. The pound, oh, wow, 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 wow. The pound is pushing it. It was a pretty, the price was bullish indeed. In a way, it's interesting. Then again, from my perspective, I would not have minded to see the downside, personally, because I think there was more space to the downside. But it really is pushing. Wow, amazing. Well, I'm not a reversal trader, so I didn't take any trades as a reversal because I was looking with the trend. The only thing is that if I'm trading with the trend, I want to have enough space, and here trading to the upside doesn't make sense. So I wasn't trading it both ways. But from a long-term perspective, I would have liked the fall because there was a lot of space to the downside. The upside still limited because, from my perspective, there's a lot of resistance still close by. But it looks like we're pushing. We haven't broken entirely though, but I mean, that's probably pretty likely. 162.40 is the high there, and 162.60 is the bigger top. Interesting. Let's take a look at the 5. Yeah. Funny how that goes. Even here you see a bull flag. And it's pretty bullish at the moment. We got, of course, a news event though, GDP in 24. So let's see how that reacts. As I said, it doesn't make sense to trade it right now with news event that close by, but also because we're in uptrend but very close to resistance. It's just for me, just looking at it just out of curiosity, not to trade, by the way. The euro dollar is getting the bounce though as expected. Remember I was saying we could expect a bounce, although I was looking for a bit lower, right? Here at the 50 fib. That far we didn't get yet. What else did we look at? Dollar yen looking for continuation to the upside, up 8 pips at the moment. Euro yen would have been up more. Euro yen, we were looking at the euro yen here around 138.10. That's up 15 at the moment. Yeah, I guess other than the yen continuations, maybe euro dollar up, but I was looking for lower, odd down. That's about it from my side, I guess. Yeah, the euro odd and pound odd, I wouldn't mind to trade it to the upside, but was hoping for a bit more deeper correction. Not sure if we're going to get that. This is pretty choppy price action. So there's still a potential maybe to make a drop, and there could be a bouncing spot. There's a supply-demand zone in a 50-minute world on the euro odd, for example, as well. So that's something to keep an eye on, maybe. All right? Well, that wraps up, I guess, today. I don't see any questions as well. So I don't want to hold you up anymore. I think those are the things that to look at today. And don't forget that the dollar yen, I'll be trail stopping it every 15-minute fractal. Right? So anytime we have a new 15-minute fractal, I'll put the stop loss. Personally, 5 pips below there, just that you know. Well, everyone, thanks for being here, and wish you all a great weekend and good trading today, and maybe even the rest of the month still. And we'll see you next month. Okay? Cheers.